What's up, everybody? It's Friday. Yeah. February 19th. What's going on? I'm thinking about all my friends in Texas. I hope you're all okay. Kind of a flat day in the market today. We were up, then gave it mostly all back, but that's okay. You know, we had a lot of bullish sentiment build up over the last 2 weeks, so that's getting flushed out. Hey, you know, I was looking through the headlines today, the business headlines, the financial headlines, the market headlines, and all I saw was, you know, gold doing terribly, gold down, worst month for gold since I don't know when. Barrick Gold had great earnings, but the stock is down. Gold is terrible. Gold is this. Gold is that. It's all bad. Every headline I read about gold was negative. Folks, let me tell you something. Bull moves do not start when everybody's all bullish and everything looks great. Bull moves begin when something is out of favor, when it's, you know, underinvested, when people think it's terrible. Now, if I think back to August, last August, when gold ran up to what, 2038 or something like that? And I can go back in my report because I clip out these headlines and I put them in my report, and I guarantee you, and anyone who's a subscriber, you know, you can just look back at the old issues. If you go back to August 2020, I probably clipped out a bunch of headlines saying, hey, gold is bullish and it's going up, and this guy's buying gold, and Ray Dalio's buying gold, and Jeffrey Gundlach is buying gold, and Warren Buffett is buying gold. And that was, you know, you could tell that was the peak, and now it's the exact opposite. Now, I'll just say this. The fundamentals, the conditions that drove the price of gold to $2,038 last August, they're still here. Still the same conditions. As a matter of fact, I would say the conditions have been amplified by the fact that we have a larger amount of fiscal stimulus, more about to hit, okay? Still have, in terms of gold itself, lower mine supply. A lot of production has been shut down due to COVID. So all those conditions still exist. So I like when this happens. As a matter of fact, if you look at what's happening with Bitcoin, which is what, almost 56,000 today, and the mania surrounding Bitcoin, and I'm not saying that, you know, I'm not predicting any kind of a crash in Bitcoin necessarily, but I like the fact that all the attention now is on Bitcoin, and gold has kind of been written off. You know, don't forget, not just as an inflation hedge, which historically, traditionally, gold has been, but it's still like an industrial metal. I mean, it's used for industrial purposes. It's used for, you know, in jewelry, in manufacturing, and we're coming out of the pandemic. So it is economically sensitive. I like the fact that it has gone down. It's being written off. You know, I see, speaking of Gundlach, I saw him say something the other day that, hey, you know what? Gold is no longer the instrument. I mean, here's the guy who was buying it up around $2,000. So, like I said before, bull moves do not start when everybody's bullish. Makes sense, right? Bull moves start when things are out of favor. The other thing is, like, I have seen now producer hedging at the highest level since basically 2012 in 9 years. So they're not going to do much more selling. I think when you get to that level, historically, you could see, you know, there's periods where they sell a lot, and then there's periods where they reduce their short hedging. I mean, so a lot of the factors that have kind of created this consolidation over the last, 6 months, I think they're coming to an end, and I kind of like the mentality here. I kind of like the market psychology here of being like really negative and writing it off. If you were to ask me right now, what is the best contrarian play out there? I would say it's got to be gold. Like nobody wants it. And it's still a valid instrument. I mean, you still have central banks diversifying their reserves into gold. I mean, all that stuff's still going on. And let me just, for disclosure purposes, I'm not a gold bug. I've never been a gold bug. I'm not on this gold is money bandwagon. But it is a commodity. It is something I look at from the lens of being a commodity. And it's also a traditional inflation hedge. Not taking any credit away from Bitcoin now, which is newly emerging. But to me, it looks like a great opportunity. I think it's a great contrarian play right now. We'll see how it works out. Anyway, those are my thoughts on that. For more, listen, the banking situation, the reserve balances, everything Treasury's doing, that's going to be very important for the next few months. Really important. I mean, that's going to set up what market conditions are going to be over the next few months. So you need to know that. I'm going to be talking a lot about that in my report. And to subscribers, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Have a great weekend, everybody. See you next week. Bye-bye.